It is March 2023. What is the Kansas City real estate market doing? Keep on watching to find out. Hey, and welcome to Fountain City. My name is Jaylenn Wong, and I'll be your host. I'm going to be walking you through what the Kansas City market is doing in 2023. But first, look at my new hat. I got it from a thrift store. It's got a cow with a golf ball on it. So I think that's pretty cool. Anyways, wanting to get into the Kansas City real estate market. Basically, I'm going to give you a brief overview of what the Kansas City real estate market is going to do. And then I'm going to break it down for buyers, implications for buyers. I'm going to break down implications for sellers. And then I'm going to go county by county and tell you about the statistics and where to find them, because you're going to want to know what your particular market or your particular county is doing. Here's the broad overview. While the Kansas City market is not as hot as it was this time last year, it is still outperforming real estate markets on the East and the West Coast. And it's even doing well in comparison to other Midwest states. So that brings us to the first thing that we have to cover, which is the Kansas City market impervious to a real estate crash? Now, I don't want to ever say that anything is not going to happen, but I think I'm in pretty good company in saying that the Kansas City market is not going to crash. If you're hearing that from different people, I just don't think that that's true. The statistics that we look at month over month and year over year are indicating that the Kansas City market is pretty resilient. The KC Metro is pretty resilient. And I brought this up in past videos, but I think it comes down to the desirability of the area, the amount of young families, particularly in this area, who are trying to find their first home, and the fact that Kansas City is still, in comparison to a lot of other areas, relatively affordable. Be careful when you read real estate headlines saying that there's going to be this tremendous crash and housing prices are going to go down everywhere. Be careful in taking that and importing that onto the Kansas City market, because it is a lot different market to market. And they may be right in terms of a nationwide housing crash, but even then, we've talked about this before. Even in 2008, when one of the worst housing crashes in history happened, there were still pockets in America where real estate continued to appreciate, where real estate continued to go up in value. So what we're going to do is we're going to focus on statistics taken from the Heartland MLS. The Heartland MLS. Now, what is that? The Heartland MLS is the multiple listing service for the Kansas City metro area. So let me define that for you. The MLS is basically when you look at a home on Zillow or Trulia or Redfin.com or any one of those sites, they pull those homes from the MLS. So as a realtor, I put any home that I list, I put that into the MLS and it goes everywhere. That's basically how you get the housing data and you track it in the MLS. If one of my listings sell, then I put in how much it sold for, I put in how much the seller had to give concessions, all of those things, I put those into the MLS and that data gets collected. And that's why we have data that gets released every month of what happened in the last month. Also, when we talk about KC Metro, that area probably is bigger than you might expect. So it goes all the way north to a city called Cameron, and then all the way south towards a city called Mound City. And as you may or may not know, the KC Metro is in both Missouri and Kansas. So it's spanning two states. And like I said before, county by county may be different, but these are broad numbers that I'm taking overall in the Heartland MLS to give you as an initial report. And then later, we'll break it down country by country. I'm going to time code everything so that you have that information. So what I would do, if you're only interested in one particular county, I would listen to the first half of this video and then I would click to that particular county and look at the stats in your area or your area of interest if you're looking to buy or sell in Kansas City. If you look at numbers in the overall KC metro area, you're going to see that the average sales price increased. Remember, this is a huge area. The average sales price increased from about $309,000 to about to almost $312,000 in the greater KC metro area. That's an increase of about 1%, almost 1%. But what you have to do is you have to keep in mind that the average home in the United States increased year over year by about 4% per year. So with it increasing 1%, that means that while homes in the KC market have increased this year, they are not keeping up with what we would expect to see in terms of home appreciation, that 4% mark that is typically standard from 1991 on. But you also have to remember too, in contrast to other markets, people are seeing and estimating over a 5% drop going the other way. A negative 5%. So with the KC metro area, with this whole large area that is the Heartland MLS, we're seeing about an increase of 1% and then sometimes more, as we're going to see if you stay to watch all the different counties. So here's what's causing the market to be suppressed. And the first thing that everybody knows has to be addressed is the interest rate. We saw a hike again in interest rates. And you may not know if you're a buyer or you're a seller, it affects you both, because you may not even realize yourself how much interest rates affect you. So what I did was I pulled up this helpful chart that might help illustrate exactly how your buying power decreases if you're a buyer. And if you're a seller, this matters too, because this means that, for example, if you're selling a home for $300,000, well, all of a sudden, those buyers who could afford $300,000 homes last year are all of a sudden going to be affording homes that are a little bit less this year, which brings the entire market down. So as interest rates go up, it's harder and harder for buyers in terms of home affordability. If they want to keep their payment the same, then you can see this chart illustrates that buying power goes down pretty dramatically as the interest rate continues to climb. This isn't the right video to go into all the intricacies of why the interest rate continues to climb, but basically it's tied to the Fed funds rate, which is tied to inflation. Now, if inflation keeps on going, then the Federal Reserve will keep raising the Fed funds rate, and then that will continue to push mortgage interest rates up. Here are some conclusions that it's important for buyers and sellers to know. If you're in the market to buy a home in Kansas City, that's great. I think that real estate is always a very safe investment, and that's a great investment for your future, for your family's future, and that's a wonderful thing. However, a lot of people in this market are going to tell you, hey, marry the house and date the rate, which basically means this: find the right house that you like and then buy it and then refinance when the rate goes down. So you're marrying the house, you're going to be locked into that house, and then when rates plummet and go down, you're going to refinance, and then you're going to get into a lower interest rate. That's advice that has worked for people in the past. But let me tell you this, let me caveat it with this, because I do want what's best for you in terms of you going to buy that home. You want to make sure that your hopes are not 100% anchored into the interest rate going down. Make sure that you can afford your home even if the interest rate does not go down. And here's why that's super important, is because here's my personal prediction. I think that after inflation gets under control, then we will see a reduction in interest rates. However, I can never guarantee that that's going to happen. So here are the three things that have to happen for interest rates to go down. Inflation has to go down, number one. Then the Fed funds have to drop their rate, and then interest rates will probably typically follow. But as you know, if you're watching the video, for inflation to go down, there have to be a number of things that have to happen, and I can't guarantee all of those things will happen. Now, what if the war in Russia and Ukraine continues to escalate? Who knows, right? Who knows what effects that those unknown things in the future will have on inflation, and then in turn will have on interest rates. If you're a seller, then what I would say is, depending on the county and the market that you're selling in, I would be prepared to have your home sit on the market for longer than you might expect. And the reason is this: one of the things that happens is days on market, which is an indicator of how quickly a home takes to get an accepted contract, slowly continues to creep up. So this is what I would say: if you're looking to sell a home, I would get that home on the market as soon as possible, because if there happens to be another interest rate hike, then buyer affordability is going to continue to go down, and your house is going to sit in the market for even longer. So I would get your home on the market now rather than later if you're waiting for April or if you're waiting for May. So what do you think is going to happen with the real estate market? I don't think it's going to crash, but that's just a prediction. I would love to hear what you think in the comments below. So with that being said, if you're looking to buy or sell a home in the Kansas City metro area, I would love to help you. My name is Jaylenn Wong. Like I said before at the beginning, I run Fountain City, which is a channel not just about Kansas City real estate, but it's also about Kansas City in general. My family is from Los Angeles, and I've been helping people buy and sell real estate here for the past few years. So if you're looking to move to Kansas City, I would love to help you. I know how to relocate people here. If you're looking to sell a home in Kansas City, I would love to help you as well. We'll use podcasting, we'll use YouTube to get your home sold even in this difficult market. So give me a call. My phone number is 626-226-6611. My email is jaylen.wong@gmail.com. So as I cover the stats in the Kansas City market, I'm not going to cover every single county. I'm just not going to cover the counties that are a little bit further away from the center of the KC Metro. I'm just going to cover the 6 main counties so that I can spend a little bit more time breaking them down. So the first county I'm going to start with is Jackson County. And the reason I'm going to start with Jackson County is because I live here, and so I know this market super well. If you look at the average sales price in Jackson County, it has gone up 2%, which is higher than the 1% in the Heartland MLS data. And I would say one of the reasons that Jackson County is probably outpacing other areas in the Kansas City metro, in Jackson County, you have a kind of strange mix of extremely high price point homes and extremely low price point homes. Now, these areas, especially in the lower price points, are getting bought up by investors who are looking to either buy cash and renovate or buy cash and flip. So that is going on a lot here. The final buyer, the person who buys it it from the investor or buys it from the flipper, the end buyer, I would say, the person who's going to end up living there, is usually getting a relatively decent product depending on how the flip or the investment goes, especially in areas that are going to be a little bit more quote unquote, undesirable to a lot of people. I'm not going to name those areas specifically because I don't want to violate any fair housing laws, but those areas that are not going to be as desirable as those other areas are really kind of turning around. You have a lot of neighborhoods that were once considered neighborhoods that you don't necessarily want to live in by local people here that are becoming neighborhoods that a lot of people, a lot of young families are considering raising their families in. And also too, I think that in Jackson County, you have a lot of homes that are really nice. And what's interesting is I found this article here that says that the luxury market in Kansas City has not been hit as hard as the luxury market in other areas. In Kansas City, the luxury market is probably, I would say you're talking about anything above $700,000 is a luxury home. And of course, those homes are still sitting on the market for longer than they were at this time last year, but they're not necessarily feeling the effects that other luxury markets around the country are. So speaking of nicer homes, speaking of nicer areas, let's move to Johnson County, Kansas. And we're just going kind of clockwise around the Kansas City metro area. The average sales price has not gone up that much in Johnson County in compared to other areas in the KC metro. But I would say too that one of the reasons here is because you have a lot of higher price point homes in Johnson County. I would say just based on experience, if you're looking for a home here, a starter home in Johnson County, then I would be prepared to fight multiple people for that home, to put in multiple offers, to compete with multiple offers. If you're looking for a home, I would say anywhere in the $300K to $400K price point in Johnson County, that is the typical kind of starter home in Johnson County, Kansas. In a nicer area, in good school districts, you have a ton of families, even despite the rising interest rates that are trying to get into that home. If you're looking to buy in this area, I would just be prepared to be as competitive as you possibly can be. I mean, I put an offer in on a Johnson County home that was priced right at $300,000. The bidding got up to $350,000, and there ended up being like 45 offers. And I'm not making that up. There were 45 offers. People were waiving inspections. People were waiving appraisals. All sorts of things that would be normal in the 2022 market. Now, the higher price point you get, like if you get to the $500,000 or $600,000 home in Johnson County, I still wouldn't say that those are luxury homes. Those are probably homes that you have upper middle class families that are living in, and those homes are sitting on the market for a little bit longer than they were last year. And so I think that because there are so many of those homes like that in the $500,000 and $600,000 range, that these are bringing Johnson County's statistics down a little bit lower than you might expect them. But if you're a first-time home buyer looking to go into Johnson County, then I would just get ready for a fight. So let's move to Wyandotte County, Kansas. One of the things with Wyandotte is that this is one of the few counties in which the average home price has dipped in comparison to last year. Last year, average sales price was about $195,000. This year, it dipped all the way down to $179,000. So that's a pretty big decrease. And one of my hypotheses for why this is happening in Wyandotte County is because Wyandotte County is a popular place for people to get one of their first investment properties. Now, to illustrate this, I have an investment property in Wyandotte County that I had to take a loan out for. And when I took that loan out in 2021, the interest rate even on an investment loan was about 4%. Nowadays, if you're trying to get an investment property and you're trying to buy it in somewhere like Wyandotte County, you're probably not going to get an interest rate that's going to cash flow for you, that's going to be competitive for you to make the money back that you need on that investment property. So I think that's a hypothesis as to why you have average home prices in Wyandotte County coming down. I think that could be a big part of it because first-time investors are not necessarily investing as much as they were once in Wyandotte County. And then so now you're left with the single families who are looking to move there. And so I think you take out that investor component. That's why you see the average home price start to dip. Moving to Leavenworth County. One of the things that I want to point out here is that Leavenworth County has gone up about 1.5% in terms of a year-over-year basis, meaning that we're comparing January 2023 to January 2022. But one of the things that has shot up in Leavenworth County is the average days on market until sale. You can see that it's an increase of 113%, which means that homes are sitting on the market, like I said before, the implications with sellers for way longer than they were at this time last year. You can see on average at this time last year, days on market was 23 days. Now it's 49 days. That's right about double the amount of days on market that you can expect a home in Leavenworth County to sit. I would say the typical home that you're going to find in Leavenworth County, you're going to find somebody who really wants to be out more in the country with with a little bit more space and still wants a relatively nice, decent home. $300,000 in Kansas City still gets you a pretty nice home, a pretty nice starter home. The average in Leavenworth County, you're gonna see some more places with a little bit more land, a little bit more acreage. That's kind of what you're gonna be looking for in Leavenworth County. Now moving to Platte County. Platte County is on the Missouri side, and honestly, these statistics were what surprised me a little bit more than any other statistic that I saw. Homes in Platte County, in terms of the average sales price, were going for less than they were this time last year. And the reason that this is surprising to me is I know that the interest rates have gone up, but Platte County remains a very, very desirable spot for people to buy their home. Whether you want some new builds, there are plenty of new builds in Platte County. There are really fantastic school districts in Platte County. I would say after Johnson County, Platte and Clay County are probably going to be the most desirable places for most families. I don't want to say everybody, but for most families who want a really solid school district, who want a place that they can raise their family or raise their children for the long haul, I would say Platte and Clay are going to be very, very attractive. So that does kind of surprise me that you have such a 4% dip year over year in Platte County. In terms of why that could be, this is just a hypothesis. There's no really real way of proving it. Is the fact that the inventory has gone up about 33% in Platte County could be an explanation as to why the average sales price is so much less than it was last year. So you have a lot more homes to choose from. The homes that are less desirable are sitting on the market for longer. They're selling for less. They're getting less than list price, and that's bringing all the statistics down. I still think that if you listed a really nice home in Platte County, I would say something like $400,000 with a 4-bed, 3-bath house on 2 acres. I think that would sell very, very quickly. I still think people are looking for that particular house in Platte County, but overall the averages seem to be trending downwards for Platte County. And the last county I'm going to go over is Clay County. I used to live in Clay County. I lived in a city in Clay County called Gladstone that is north of the river. And the average sales price in Clay County has gone up about 1.2%. As you can see, that days on market has shot up as well as the inventory available, which is causing buyers to have a lot more options, although they're not necessarily having the same buying power as they would last year if they were buying with last year's interest rates. Now, in spite of all these stats showing a decline in Kansas City housing market and a decline in certain areas in Kansas City, if you have a house that is well suited for a first-time home buyer, somebody who's a millennial who's looking to buy their home, and you price that home correctly, I still think it will sell within the first 1 to 2 weeks, just from what I've seen, just based on experience. If you have a home that's below the average price of that particular county, that's a well-kept home that you can tell has been well loved and is not run down, then that home is going to sell pretty quickly because there's going to be a lot of people who are looking for that home in your particular county. The reason that these statistics are down is because you have some homes on the outliers, the homes that are just so far above the average, like the luxury homes in different counties, and the homes that are so far below the average, like the ones that are really fixer-uppers and that are really run down, that are kind of bringing the overall average down. So I hope this was helpful in terms of a real estate update in March 2023. I'll be back in April 2023 with another one of these.